Hey traders, what's happening? Can you hear me? And can you see the screen? What's up, Robert? Marcos says yes. All right, guys. All right. Let's get going. Dollar sec, right? We like to look at this as a good dollar indicator generally. I guess real risk of a huge breakout here, but here's my thing on this. You do have trendline resistance, pretty close. And even if this were a bigger breakout scenario, I'd still expect to get one more leg down within the consolidation because you typically would get 5 waves in the consolidation, right? You don't have to, but just from an Elliott standpoint, right, you go A, B, C, D, pull back, E, and then you're going to go off to the races. My thing on this is I don't really know where it would fit into the larger structure, right? It's not like you have a 1, 2, 3, 4, and this would be 5, right? So, yeah, kind of confused there. So that is, okay, so Ty says your fork says bull market for almost a year. Okay, so don't make a forecast based on, a technical indication, right? Let's look at this a different way. This is a weekly chart, okay? And we have 5 up from the 2011 low. Typically, you get 5 up, right, from 2011 to 2016, a 5-year, 5-wave rally, and you are usually going to get a 3-wave drop. And again, this is a 5-year rally, and we've now been sideways for like a little over 2. So, you'd be looking for an A, a B, and then a C wave down, right? I guess it's possible that this is some sort of complex A, and that's a B, and that's a C, although that's really ugly. I was thinking more like you just consolidate between these levels for a really long time. So whatever, that is a longer term level that you want to pay attention to. And also, look, you've got this right here, just a big old horizontal level, right? Okay, financial crisis high, dollar bull market high, and we are still kind of around the level. So big long-term level and short-term, I guess, possibility of a breakout. Remember the divergence possibilities, right? Because there's a lot of possibilities here. You have to try to weigh which one makes more sense. So does a full-on dollar breakout from here make a lot of sense? Look, I guess it's possible. Well, certainly it's possible, but I think that the more likely scenarios are still, A, and then something like a big consolidation B, and then you get a bigger C wave down. Okay. At least that's where my head's at on the dollar sec. All right, moving on. Let's look at dollar itself. So DXY held that 200-day, could not hold this. Remember, wrote about that last week. We've gone higher. We are now getting back into resistance, or I should say a level that, could be resistance. And that would be essentially right here. So you've got possible trend line, you've got slope levels, which have served us pretty well in terms of providing, levels, workable levels, as we might say, right? We've got a low over here and 50-day average. So we are currently 96.23. The high today so far is 96.26. So essentially we're at the high. And top of this zone, 50-day average, these lows, trend line, all that stuff. would be 96.36. So if you're saying maybe a zone, potential zone for resistance, what have you, we're in the zone. We're at the lower end of the zone, and the top end of that zone is right here. Okay, so we've got that. Let's look at US dollar. By the way, I'm not even going to look at a Euro chart because I literally have nothing to say. It's like nondescript to me, and I don't want to make something up. But given the weightings in the index, right, Euro being 58% portion of DXY, right, or I should say DXY is 58% Euro, or what have you, then I would just honestly pay attention to DXY. The level's cleaner here. You know, coulda, shoulda, woulda, probably should have been using this to trade Euro short term the whole time, because these levels have been hit pretty good, right? I mean, you got support, you got resistance, you got support, going back to resistance. So, you know, short Euro, long Euro, short Euro, long Euro. You know, if we go through here, then, you know, hell, I don't know, right? Robert saying pound Aussie. Yes, you will. We will, absolutely. We will look at pound Aussie. I will look at towards the end when I get through everything here that I've got written down in my notes, and then we'll take a look at pound Aussie. And Ty is Euro Yen. I've got Euro Yen on the on my sheet already, so we'll definitely look at that. Kieran, how you doing? All right. So U.S. dollar, the Dow Jones one, going to be up a little bit more today because of the obviously Aussie smash job. That's when we say that we're happy we use stops. And all right, so here's Euro Yen, or sorry, Euro Yen, U.S. dollar. Essentially going back to this level here, I think 12,231, so 12,231. That's going to be, again, a long-term parallel, which has been pretty good for a really long time. And it was perfect resistance back here in January, right? You've also got a 5-wave move to the downside here. So, you know, 618 and this is actually going to be a little bit above the trend line and all that. But if we're making a zone for resistance, we're probably going to say 12,230 to 12,245, okay? And that would be a pretty big level to pay attention to up here, all right? So that is US dollar. So, you know, when we're looking at a lot of these, you can see that, or especially this one, I should say, you've got this, like, we've got the dollar coming off of, you know, support, but it's already a good deal off support, and we're getting pretty close to resistance, but we're not quite there yet, right? So depending on how we get there, like if it's a straight shot, then the next move is probably to be selling dollars. If we pull back a bit, right, and say maybe get into like this level, like the 12, you know, 165 or something like that. If you pull back from here, that would be support, and the next move is probably to buy dollars for that move. So, you know, just kind of have the levels ready, is what I'm saying here. All right, so I'm going to actually just get rid of this. I'm going to throw a level over here so that I can have alerts as to when or if these guys get hit. All right. Okay. This is like the way to do it, right? By the way, right? You want if this gets hit, buy dollars, you know, look for dollar long setups. If this gets hit, sell dollars, look for dollar short setups, right? Okay, let's go to, I said I wasn't even going to look at Euro, we're not. I will look at Euro Yen in a little bit. This is a stock, actually. I bought this yesterday before the close. Viper Energy Partners. Just love this chart pattern. It's an hourly chart, but you can see it's got a nice kind of base here, right? All right, let's go to, all right. like I said, euro. Okay, so here it is. I mean, I don't know. It's like we're kind of sitting right at this level, but again, we have the DXY chart has been so much cleaner for an extended period of time that I just kind of don't trust anything I see on this euro chart, like at all, right? And US DXY says the resistance in the dollar, if there is resistance, right? Say proposed resistance or possible resistance is actually higher, which means euro support, if there is support, is probably lower. So kind of just taking it pretty simple there. I suppose we could draw a 618 of this move and see if we get anything at all. Actually, we're already there, so there you go. But again, I wouldn't trust it because the DXY chart says that we might slip a little bit here, go higher in DXY. All right. Okay, pound. I love these levels in cable. Pretty good levels here. So remember a while ago, probably in December, we had drawn this fork and said that once we hit the median line, that means that we've confirmed that fork. Okay. Well, obviously we confirmed it here. That was on 125. Thought we might pull back from there to get to this level. We ended up spiking above it. Some Brexit nonsense later that day. That was a Friday, if I recall. And then we were back below it, hit resistance again. So this is a good level, or a good fork, I should say, to pay attention to, clearly. Right? You've got really good, precise levels within it, right? Hitting resistance here on this parallel, finding support, right? Finding here, and then once we broke, it was kind of down. So essentially, you've got two levels to pay attention to, all right? You do have up here, which would be resistance, that's 30.60, a lot there, including just simply, some old support here. Okay, so that's 30.55, but let's call it 30.50 to 30.60. And then you've got the 128.90, which is where this would be the decline, from the 125 high, would consist of a relationship that makes 1618. So, if you want to count it Elliott wave wise or try to, 1, 2, 3, 4, 5, little a, b, 1, 2, 3, 4, 5, right? And looking for a decline into this level and for support. So again, looking for support there. And I'd be looking for a bounce, but again, first resistance right here, okay? This is obviously a really good one to pay attention to because I do believe that we have tomorrow is Thursday and you've got Super Thursday, right? This is the big BOE one, right? Where you get, the rate decision, inflation report, asset purchase target, all that stuff. So it's the biggie, right? They get forecast, all that jazz. All right, moving on. Let's look at the Australian dollar, which has been just destroyed, right? So daily, you look back on these and you're like, I'm such an idiot because like we hit resistance, we nailed resistance, right? We had it. I'm kind of trying to trade with like a bigger theme in mind here, like thinking that basically we've got kind of a big, huge low, right? So, if we go back and look at the weekly chart, let me pull up a weekly chart. That one, hold on. Here you go. All right, so here's the weekly chart. Flash crash into the lows, okay? Looking for kind of a bigger basing process, but so we're gonna take shots on the long, or my plan at least is to take shots on the long side, and then see if we can catch it. So there you go. So all right, how does this fit? Well, first of all, let's pay attention to levels. This clear breakdown. Okay, do we want to try a short? Not a bad idea. I'd be looking for a short into 7160s, okay, right? 7160, good clean spot, right? 7160, 7164, right? Right here, 7151. And you've got the parallel here too, which I did have in this nice magenta color before, and we'll go back to that. All right, so all this resistance, resistance, resistance. Let's see if we can maybe get a little bit of a bounce into that. So let's go to an hourly chart. All right, hourly chart. Be looking up here for that 70-60s area for some resistance before we get a drop. Now here's how I would look at this, because this rally from the 125 low is a 3. What I mean by that, A, B, C. Remember, up until this point, even right here, which is why we had the long, or why I had the long at 72.35, you know, it was still possible that this was a 1, 2, 3, 4, even though it's pretty deep 4, right? And then you're going to go higher in 5, and this looked beautiful, like a 1, 2, and then we're going to a 3, a 5, and it just was not to be. So at this point, what you're talking about is this is a big A, this is a big B, and we're lower in C, probably back towards this 70-20s area. If you recall, all the way back in early January, this is what we were looking for kind of anyway, right? Because we were looking for a move down to this former base low, the low from October, which was also support here in late December before you got the flash crash in Aussie and yen, and notably Aussie yen. So that gives us essentially 2 levels to look at for a trade. Maybe you get a bounce here at 71 and change. That is a parallel as well. You can see it did do some damage over here as far as resistance was concerned. Also here for like a one-day thing, which is all I'd be looking for anyway, right? So a little bit of a bounce back to 71.60, and then we can look for a move down to 70.20, maybe a little bit below. All right. Year open, by the way, is 70.54 for those wondering. All right, so 2 levels to look at in terms of a trade going into the rest of this week. Here, we'll bounce here, hopefully, and then take it down here. Okay, and that's again A, B, C. That would make this 1, 2, and then go into a 3. All right, so pretty good chart. You know, out of chaos and disappointment can come clarity and success. And that's what we're looking for here. So eye on the prize. And don't be afraid to, like, you know, turn into a bear after a decline like this. It's all about having the right levels. You know, those of you that have been with me for a while, you know that my style is I try to get into a trade at levels that, you know, really, because no one knows what's going to happen. You just don't. Okay. Anyone that thinks they know what's going to happen is in for one hell of a learning lesson. Okay. And the idea is to get into the trade and have the market go in your favor immediately, and then you can tighten your stop. Right. It's all about managing that risk, getting that risk as low as possible, as quickly as possible. All right. Let's go to Kiwi. Good levels in Kiwi here, 4-hour chart. Bigger picture, I'm not real sure. Let's actually, this is a good idea. Let's look at the longer term picture on the New Zealand dollar. Okay, here you go. So this is the longer term picture. We have come in, so like again, big support, but we've actually come into pretty good resistance here too. I mean, you got the 50-week, 200-week, you know, so you got to respect maybe a little more downside than we might think. 67.30 is going to be a level. All right, so let's go back to this shorter term chart. And let's do this. Okay, get rid of some stuff here. All right. So, all right, a little bit of a trick. You know why I had, this is, right, we have this is why we had resistance marked up here, is because, you've got the underside of the old channel. So that was pretty good. That was pretty good. And my best guess on this, because at this point now you've got obviously a three-wave rally from the Jan low, just like you do in Aussie, of course. Okay. So my guess on this is that all of this ends up turning into some sort of a like a B wave triangle or something, right? In which you get A, B, C, and then D, E, and then eventually break to the upside. Bad news on that is that volatility is going to die. The good news on that, at least I think, is that we have an idea of what's actually happening. So, all right. That gives us a target down here for the end of this wave C around 67.09. 60, the year open you can see here is 67.17. So let's keep that chart for later. And let's look at the near-term chart. We'll even go to an hourly chart. Okay, so hourly chart, we're looking down all the way down here. Okay. We are at a level for a bounce pretty much now. Okay, you can see the parallels. Okay, I mean, it's really, really clean, beautiful. And all we're looking to do, I don't know if you get all the way back up here, that seems a little much, but what I'd be looking for is probably resistance in the 68, 70 to 80 range. So that is just this right here, okay? And if you do get that bounce, you're going to be in the vicinity of the averages, right? 200-hour average, always a good one. I don't really look at a 50-hour average, but it's right there. And that's kind of where, look to see if you get resistance for a short, and then, take it all the way down, eventually close to 67, excuse me. But your next level for a bounce, and where I would probably take some off the table, would be 67.70. Let's go to that 4-hour chart again, right? And that is this parallel, which you can see has been fairly important, right? Since late December, actually, but I was going to say since we started the year. All right. So good levels in Kiwi to pay attention to, and Aussie, which is nice. Okay, dollar CAD. Dollar CAD's a weird one for me right now because we're kind of already at a big level, right? So dollar CAD, this is the channel all the way back to, as you know, 2017 low. Ding, ding, ding. Now, the more important levels on here seem to have been or have been the 25 line, which is magenta, and the 75 line, which we were looking for a short up here, never got it. But you are at the median line, right? So you're at a median line. I mean, we're there. The median line hasn't been all that precise in terms of its, being, hold on, in terms of being support or resistance. So I'm not real sure. We might want to actually look and see if we can find a better level. So let's do that right now. All right, we're going to go to, and also, if we try to weigh the evidence in terms of like the commodity currencies, does it make sense that dollar CAD would be topping like right here when it looks like we've got pretty good, I think, sense of what Aussie and Kiwi are doing in terms of their, if they get a bounce, they're sells, right? It would seem unlikely that Aussie and Kiwi, have decent drops ahead of them, whereas dollar CAD is all of a sudden going to roll over. So I'm not really on that train. And let's remember that we are coming off of the 200-day average, and we are coming off of log scale, and we are coming off of a trend line essentially from the February low, 2018 low. All right. Okay, so we've got that. Let's look at this guy. All right, let's see if, so when I look at, like, we're going to try and look at a parallel. Let's look at a parallel. All right, let's go first to, we're doing this, you're doing this with me. This is going to be fun. All right, so we're going to look at this. This is log scale, so we have to pay attention to the exact angle of the ascent, which is 18 degrees, okay? 17 degrees, okay, here we go. All right, so that is 17 degrees right there. I want to take it off of this high and see if we get anything exciting. Not bad. And you can see why I would say not bad, right? Because when we look at this, we can see that we have one touch, two touch, three touches, four touches, and even over here, you've got some touches. So it would seem more likely to me that we don't just turn down right here. All right. Again, this is given the weight of evidence on the what we're looking at. You've got a pretty good horizontal level over there as well. Let's throw that up there. You can see you can learn a lot just by looking at a chart. That would be 3260s. Okay. Let's say, oh my goodness, look at that. That is a 618 as well from this. So our bearish, count here, and this, we're thinking that we have a move, we're headed lower, right? I think we're headed down towards the trend line eventually in 2760s, right? We're going to test this low down here from last October, and maybe a little bit lower than that eventually. On the longer term page, you can see the chart that I've got. But, if this is like a 1, this is let's say 1 or A, 2 or B, 5 waves down, okay, for 1 or A, right? Probably 1 of C or 1 of 3. Now we've got a beautiful level to pay attention to up here at 3260. All right, so that gives us room to take it higher. But frankly, I'm more willing to trade Aussie and Kiwi on the downside, with the levels mentioned. But this is something to pay attention to as well. All right. Dollar yen, I don't have a ton to say there at the moment. I like some of the other crosses better, like the other yen crosses, which we're going to look at for trading. I have a channel here. You can't really, I don't know if you can really see it. It's drawn from here. So you can draw yours like this, right? And all I'm looking at is the center line, which is, kind of like right here. We just hit it today. And a level just below that. So I'm watching for 109.45, excuse me, would look like a support level for me. Yen price action's kind of right now, but 109.45 is the level to pay attention to. After we took out the high on Monday at 110, this high, right, was 110. We took out that high, and since then we've just consolidated below it. So I don't know if that means we're about to go to the upside on this or what, but 109.45 is a level to pay attention to for support. I'm kind of going to leave it at that. So if you do drop below 109.45, then maybe there's something in the cards as far as a bigger decline is concerned, but don't have super strong opinion there. We look at the Nikkei here as well. Go to the Nikkei. I mean, Nikkei is like right into a huge spot. All right. And it's pretty, it looks pretty big, doesn't it? So, you know, Nikkei, huge level. And yeah, kind of hard for me to be super bullish dollar yen when I see this chart. I guess that you could break above it, sure, but probably going to get a reaction off of this, I would think. All right, let's look at other yen crosses. I think they're a lot cleaner. Euro yen actually is one. Taking out the first leg of the flash crash here, but we got a decent channel, like, you know, pretty good. So got a pretty good channel. Just take a line off these two lows and extend it off the high over here. Resistance, year open, looking like we're getting a nice little impulse, 5 waves down. Might get a bounce, you know, more or less here. You've got these old highs over here, okay? But then you'd want to be selling probably up near, you know, 25.50. So 125.40, 125.50, hourly chart is where I would think that you get resistance for a short. You can then try to take that down to the first level, which is 24.30. And if you break that, then you would actually have the opportunity to probably do a full channel extension, which is this. So that would be a pretty big drop. That would actually take you all the way back down to 122.65. Okay. So 3 levels: 125, 40, 50 resistance, 124.30 support, and a break would target all the way down near 122.65 ish. All right, pound yen chart we've had for a bit. Pretty good as far as getting resistance up here. Never got triggered on a short. If you did get a bounce, I'd rather do euro yen at this point. Looks a little better to me. And you've got the BOE Super Thursday tomorrow, as mentioned. And if you're going to play in that sandbox with cable, with pound, I would just do it with pound dollar, right? We've got good levels there anyway. So I would just do that. But 143-ish is going to be resistance in cable, or pound yen, I should say. So these are the levels, irrespective of BOE or whatever I think may or may not happen there. Levels are all the same that we've mentioned before. So we're looking at 143 and change resistance, and first good level. On the downside, you might bounce from this median line here, right? We kind of have already today. But you're looking at the, you know, the 140.60, 140.80 area, and then down towards probably about 139.25 or so, right? These congestion areas over here. So that's it. Euro yen looks like a better bet to me, or a better trade to me. Aussie yen. All right. Okay, so Aussie yen actually looks like the 78, 75, 85 area for a short, okay? So with that, you've got kind of a similar situation with Aussie dollar. Probably finished up the first wave here, and then got kind of a B wave correction, and now we're going to crack below these lows. You could get down to 75.40, that would be daily reversal support, and we'd be looking for, again, 78, 75, 85 resistance, and you can take it all the way down to 75.40. More than likely, I'll stick with the Australian dollar itself, but if we get any clarity on yen as it pertains to dollar yen, then maybe something there. But these are good levels. You can see clearly that this is, an important spot for this cross, right? I mean, resistance here into the flash crash, right? Resistance up here, kind of spiky, but resistance here very clear, support here very clear, month open, all that good stuff. So you've got a solid spot to trade into on the Aussie yen cross, okay? There's even support over here. Yeah, that's a biggie. All right, let's go to some commodities, and then I will look at questions, right? So I know pound Aussie was one, but I want to look at some commods here. All right, we've got crude oil. So crude, we're getting a nice little bounce here today, but this we're coming up on what I think is resistance. Remember, we look at this in the context of the long-term chart, right? So this is the 1986 channel. We've rallied from the depths of the oil depression, it seemed like, and we are coming up on this long-term parallel, which I would pay attention to for some a bigger drop. I do think the low down here is huge. Okay, it's just a good spot to make a huge low from. Again, long term, we're looking at something maybe like we had. It seems like a bigger version of this over here, doesn't it? You kind of have this, you rally off the lows, okay, pull back, go up here, same levels, right? Go up here, go up here. We did kind of take it out, and it was more difficult, but we did, right? Come back down, hit this level, hit that level, same level, come back up. So like we might be basically about right like here. See what I'm saying? So I think that there's a chance, at least for the longer term bull case for oil, this is what you want to see. I think you want to see the market, coil between essentially 56 and 46. Okay, this is just a kind of a what I'm thinking is going on, right? It's not a trade, but viewed in that context, in the sense that we know that we've already come into a pretty good spot, right? We're getting really close. Maybe you have $2 more on the upside before we have a bigger pullback. I'd be looking at, and I think we just hit it, 54, 54.30 ish. I'd be looking at kind of, respecting maybe a pullback to say 52, and then see if we can trade up into the 56 range at some point this month. Okay, so levels I'm paying attention to in crude: 54 now, 56 or 52, and eventually 56. All right. Let's go to metals. Silver, really clean. This is a fork. Continue to follow it, really. I mean, first level for support you want to watch for is actually going to be something like probably like that. Okay. So you can see this resistance, 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 support. Median line doesn't look like it's as important, so that would be down here around 1535. Resistance 1590, support, I think, around 15.35. Okay. Gold. So remember, we had the 1530 or 1530s, 1330s is kind of resistance in gold. Got close enough. I mean, we traded 1326 on this. And by the way, these are the prices. I'm looking at the CFD, so this is not futures prices. This is a CFD. We've held pretty good so far last couple of days here at this 1312 area, which, you got the old highs over here in June, right? You can see support here, support here. So we're still consolidating above it. I guess my worry on this is that you risk at least a bigger pullback, or at least maybe a pause, given the silver chart, which appears to have support a little bit lower. So I don't have a strong opinion on gold right here, right? And let's look at copper. Okay, so copper, first things first, we are coming up on the 50-week average, all right, which is in line with these old highs. And we're coming from the 200-week average, okay? Four-hour chart. This is a chart that I had published a while ago, and I said that if we do go through this channel, then we'll have a bigger fork to look at, and that fork is now. So this fork right here, you can see is all, we have a median line. We do have the old highs up here a little higher, so maybe we go through this before we, kind of consolidate. But we're going to be looking at trades probably for a very long time within parallels associated with this fork right here, okay? So copper, hell of a run, but again, probably getting a little bit into resistance as I speak. Here's another thing, right? How frustrating is this? So, it used to be when the world was not ruled by central banks, that intermarket analysis and, looking at multiple markets kind of gave you an edge, and it was a good thing. So like, if we looked at a copper chart like we have here and we turn bullish on copper, you're like, well, that kind of makes sense because Aussie looks like it's coming from a flash crash and it looks bullish too. Well, that stuff just doesn't matter anymore because now you've got central banks and bankers that come out and, they just destroy their currency. It just doesn't matter. It's a shame. I don't know if we'll ever go back to that golden age, but yeah, who knows? So anyway, you can see I'm a little frustrated with how things are going, but you can see that copper getting into resistance. So while it may be basing for a much longer term move higher, and I think it is, got a big possible double bottom here, right, which would have a big target above, you're likely to get some sort of a pause, pullback, or what have you following this tag of these highs up here. But then I think it'll be very important to pay attention to any sort of possible support on the pullback in copper. It could be 279.80. It could be over here. My guess is it's going to be somewhere actually that we don't even have on here yet. And I want to draw it in. All right, so it'd probably be something like this. Yeah. So it'd probably be on this one. You see how clean that was? Those three touches right there? That's probably where you'd be looking for support on a pullback on a little fake out. All right, so come up here, get everyone excited for the double bottom breakout, and get a quick pullback to this level here, which depending on how quick it happens would be to 276.50, all the way up to 278, something like that, if it happens later in the month. But yeah, good chart on copper. All right. We had a question on pound yen, or no, pound Aussie. Well, I think that, you're coming into decent support pretty soon, or you should be looking for decent support pretty soon in the pound dollar, and you should be looking at resistance in the Aussie dollar. So I do suppose that a bullish pound Aussie bias makes some sense, right? Let's look at a couple things here. Okay. I mean, you got a hell of a base here. 185 to say 173. So you're talking about 1,200 points. So if you get, 185 break, your measured objective just loosely would be, you're getting close to 197 on a target. All right. So there's that. We coming from the 200-day, which is a solid thing. Let's see if we can get a little more precision on the levels near term. Okay, so let's look here. Probably go up here. Want to see if we can find just the slope of this. All right, we're going to go here, here. Pretty good. So actually on a center line right now. I'd probably be looking at support down near 180, right? So again, maybe a little Aussie bounce off this level that we were talking about, and who knows what the hell happens with BOE, but we've got two good levels in pound to look at, and kind of looking at support maybe down near 180. That's the 200 average on the 4 hour. Either way, just you've got a uptrend to deal with and structure to deal with from this December low. It's just this trend line, extend a parallel off the high, and then you get your levels within it, right? Okay, so there's that. Let's take a look at the market, so-called market. This is the NASDAQ futures chart from last night. It's kind of ridiculous, but it's a level. I mean, something. So we'll see, but I'll bring in like kind of trading charts here. So here's that same level right here, okay? This is an hourly chart. As you can see, the drastic market plunge that occurred this morning, it was quickly bought because this was a huge buying opportunity, clearly, at the 50-hour moving average. We're coming from what I think should be resistance. So I'm bearish here. I don't know what else to say. I'm looking for a drop down towards, as I said last night, about 6,800. And, that'd be a crazy drastic move. Would that be allowed to happen? I don't know. But that's what I'm looking for. So we'll see. By the way, the futures level, the high today this morning was 70, 38, 75. So you still haven't quite hit 70, 47 and a quarter. I don't know if you have to. You don't have to. But, I want to point that out. You haven't hit it yet. We'll see. Okay, short-term levels. Actually, I would pay attention short-term to some of these Dow levels. Okay, you've got, this is a shift fork on the Dow, and you can see the center line on this, right? Pretty good in terms of providing some support. Got a little fake out here. I thought we were actually going to get a dip over here on the 4th. I know that's crazy talk. No, sorry, that was actually Friday. But if you can get a drop below here on the Dow, which really, folks, is just a drop below this morning's low, about 25.3, so it's 100 points lower. So if we can actually get a drop below there, that would be a sign of a very minor behavior change. But your level to watch on a drop, again, if that is allowed to happen, would be the top side of this trend line, which goes back to your October high, right? So your October, November line, resistance in December, and then we'll see if that holds as support. Because if that holds as support, you're actually looking at a pretty decent possibility of more upside. Okay, we had the longer term NASDAQ chart last night that I posted, and this is the NASDAQ composite, right? We had this longer term chart right here. Yeah, there it is. So, with this one, we're into such a huge level and the 50-week average that I would be looking for probably more of a drop than would be suggested by the Dow on this chart. Okay. But yeah. So again, resistance, give or take 70, 47 and a quarter in NASDAQ futures. We're there, man. I mean, what else do you want for resistance, right? It is nice to see that the market's actually responding. Look, the NASDAQ's down 3 points. How wild. Let's look at countries. I mean, it's a sea of red in most parts of the world today. Brazil's down 2.5%. South Africa's down 2%. Philippines, Russia, Turkey, China's down 1%. Countries are up. Nigeria is up 2%. India, Belgium, or Netherlands, Austria, Italy, Peru, and NASDAQ's down 5. You can see mostly red. So we are starting to see equities actually maybe not go higher for maybe at least a couple of days. But again, we'll see. All right. Oh, there's a bunch of questions. Stop loss for proposed Aussie. That we don't have that yet because we don't have that trade yet for Aussie. But if we got a 71, 71.60, what did I say? Hold on. If we got up to that 71.60, 65 area in terms of a stop loss, I'd probably put it above 72. That's the old low here. You don't want 71.95 would be the median line. 72.10 should be a pretty good stop loss. Peter asking about there's a pound Swiss question. I'll do that. And we also have an S&P 500. So yeah, I'm looking, as I've said for a while, I've been a little more concentrated on NASDAQ. than the S&P, just because you can kind of see that the action, if you will, seems to be in tech a little more in terms of the crazy moves. Let's see here. You see we're getting big advanced decline day today on the downside. S&P 500, there was a question there. Okay, where are we? Okay, so levels within the S&P 500. Here's this fork here. Frankly, I actually have resistance a little higher for the S&P 500, a little kind of disconcerting. Let's go to a 60-minute chart or 4-hour chart. All right, so I think this is probably the same. I'm not sure. It's the exact same. Okay, so that's cool. So we've got that, and the center line is probably something around where we've been. So let's see if we can do anything there. 26. That would be 26. All right. So here's the S&P 500. Okay. We've started to tail off. In other words, we haven't been able to get to resistance. I actually think resistance on this chart is, so we've already got the NASDAQ at a level, but on the S&P, kind of starting to stall out before you get to level. So it actually happened over here, and then it's happened over here, which was, of course, yesterday. And yes, that was yesterday. It was the end of the U.S. session. So the question is, do we actually get up there or not? All right. So Peter and everyone else, I would do one of two things here. Either nothing, or short up here, which would be 27.70, or short on a break of 27.02. Call it 2,700. Right? So you can kind of see this is where your breakdown level is. Looks like a 5. 1, 2, 3, 4, 5. And get a dip. I would think, by the way, that your support on this would be like 25.80, 25.80, 25.90, right? See the spikes over here? And that's going to be in line with, this is a long-term center line. And there was pound Swiss, and then I got to run. And pound Swiss, I got to tell you, this is one that I haven't looked at in ages. I hate the Swiss franc. I hate trading it. Marco says, are you thinking about a possible long at 28.90? Yes. And he says, why? And I say, because this looks like a really good level to buy it. So, yeah, definitely, Marco. So this is level, yeah, old resistance, support, 1618 relationship down is 28.90, 200-hour average getting close. So, yeah, I would be looking at a long possibility there, absolutely. Oh, he goes, why? He goes, why was a typo? Marco, you're funny, man. All right, so I like it. So, all right, here is pound Swiss. I'd be looking at this, I guess, if I had to. is essentially going higher from, if you get a little bit of a dip here, right? I'd look for support right there, right? Why not? So you're looking at 28.90. Kind of makes sense with looking at the way I'm looking at pound dollar, right? You're just looking for support on this broken line. So I'd look right there. Call it 28.90. All right. All right. I've got to run, guys. Thank you all so much. Marco goes, why do you hate Swiss? Well, I guess when I look at that, when I look at the long term, look at the chart of Swiss, it's just been one big cluster of confusion for so darn long. Like, I remember being really bullish dollar Swiss back in like 16, 15, 16, and it just never went anywhere, right? So after this debacle from the SNB, you had kind of this coil that's never ending. Eventually this is going to be a great trade somewhere because, it can't go nowhere forever, you would think. So this is the long-term Swiss chart. I kind of have these angles as being kind of important. So like we turned off of it in November, came in. Is this a giant head and shoulders bottom? Are we going up to 110? It's just confusing to me. It's been really confusing for a long time. Like we had this head and shoulders breakout, and then I thought it was fake out, and it was, and we came back, and then here we are turning up again. Maybe dollar Swiss is like the most bullish thing in the world, and I don't know it yet. I don't know. It's certainly one to pay attention to. Okay, so you get 100 pips higher, start get to 101. You're going to be up pressing the top of this range, this November high again, and yeah, at that point there is the real possibility that we get a massive move up to 110. That would really, really go against what I'm thinking dollar generally, but no one cares. The market does not care what I think. So yeah, who knows? And yeah, it's also a tough currency to kind of trust on the charts at all because, and Ty just made this point, you've got the SNB, which they could step in and do something at any moment. Like, they've done it before. I mean, look at these long-term spikes, right? So, typically they want to keep it weak relative to Euro Swiss. But again, they are a financial center, right? So you can't have a super weak currency if you're a financial center. Yeah, so I'll leave it at that without getting all fundamental. So yeah, chart-wise, it looks like it could be really explosive, / the biggest fake out ever. And that's probably a function of just the messed up fundamentals. All right, guys. All right, so I really got to run. I would get this up and archived ASAP, and have a great rest of your day and a great rest of your week. All right, bye.